So, welcome back after that very short break, but we want to get on with the good stuff, as I said, that's coming up. Dan Ramey is president and founder of Houston Financial Forensics, highly qualified. He teaches graduate level forensic accounting, has won awards for his teaching. Dan will be using the US military concept of stopping an attack before it happens, left of bang. He'll be outlining the definitive steps that you can take in your organizations to discover and control fraud before it occurs. Fraud becomes a really expensive business distraction once you move to right of bang. Dan Ramey, welcome. I'll let you explain all of that. Hi, Dan. I think you're on mute.
I got muted a while ago. Okay, now you can hear. Okay.
Perfect.
Well, thank you all for joining us. I want to talk about a principle of turning fraud detection and prevention into a business process. And you've got processes for paying bills, you've got processes for billing, for purchasing, whatever it may be. Let's add fraud to that and the fraud detection. So let's go through some concepts with this. That just line. I'm using a theory that the U.S. military uses called left of bang. Bang is defined as the event when something happens. Okay, that could be a bomb, a sniper, an attack, whatever it may be. The military trains very well for what happens after that. Likewise, if you call your local CPA, fraud examiner, forensic accountant, and you know that there's been a fraud, we know exactly what to do and how to get it to the end game. What we want to do is not even get to that end game. We want to be able to try to push that back and say, how do we detect the fraud before it happens? So that's the theory behind left of bang. It's an excellent read for personal, for business, for military. It was originally built for military. I read it and I go, I think we can do something with this. So what happens is you've got bang. What is bang? Bang is a fraud. Okay, it's something that happens. We're going to focus today just on employee fraud. We've got vendor fraud, outside party fraud, cyber fraud, all the things that we've got potential going on, but we're going to focus on employee fraud today. I want to leave you with two concepts to start with that I want you to think through the entire presentation. First one is business has never moved this fast before. It will never move this slow again. Point being, things are moving very quickly. Technology, AI, transactions, banking, whatever it may be, we're moving faster than we ever have before. We're going to continue to move faster. We will never be this slow again. So while we're on the business side, things are moving fast. On the fraudster side, it is too. Transactions can come in, they can move money quickly, they can get it into the system and get it out. For instance, if you move money into a bank account and then flip it into crypto, crypto can be moved multiple times within an hour. Okay, and then tumblers, and there's just so many opportunities there. So we've got to be preventative to try to stop this. The second concept I want you to focus on while we're talking is a maturity model. And I'm sure all of you have seen a maturity model. Wherever you are in fraud detection and fraud prevention, my challenge to you today is that you go up one level. Okay, so take the information we're going to talk about and go up one level. So if you're doing nothing today, let's go to level one, that initial entry. What do we do? If you're level 3 and you've got a defined process for fraud prevention and fraud detection, then let's go up another level to quantitatively manage it, okay? We can always improve wherever we are. So don't think if you're doing nothing, you got to get to level 5 to be successful. You don't. And we'll talk through some of the things you can do. So I'm going to give you a couple of bangs to get you kind of started in your mind thinking. These are investigations that I've done. I could go on for days about this. I've got a short time, so we're going to hit 2 very quickly. Had a controller at a relatively small company, about 85 people, had been there for 22 years. The audit team had just finished auditing. Everything came out fine. In the US, we have what we call SAS 99, which is understanding the risk of fraud in an organization. They had interviewed her. They had gone through the checklist. Nobody could steal. She's not aware of anybody stealing. We have dual authorization for everything. There is no way anybody could steal. 2 weeks after the team pulled out, the CFO called and said, we have a problem. The first problem that we encountered was her American Express bill. By the time we got through, we went back 4 years of transactions. She had stolen 11 different ways. American Express card, gift card, gas cards, petty cash. She had her daughter on a payroll, so ghost employee, processed invoices for her son's company that didn't do work. Verizon is our cell phone. She was in charge of the cell phones. All of her family had cell phones on the company. She even stole a vehicle. And this is a long story. We're not going into all of it. So just suffice it to say, where we normally see one thing going on, because this person had full responsibility over so many processes, she took advantage of every one of those. Total, not large, total was about $300,000. So not a very large fraud in the scheme of what we normally see, but 11 different ways. The second one is an international energy company. It's based in Europe, offices here in Houston. Accounting clerk, her job was to do wire transfers from bank to bank within the company. Okay. And on a daily basis, she moved millions of dollars. That was her job. No big deal about the amount of money, but she figured out she had admin rights to the wire transfer system. So she created a second wire transfer or second admin account in the wire transfer system. And at that point, she could set up a template in the wire transfer system and approve it with the other one. She could enter the data and approve it with the second one. Her first transaction was she paid her cell phone bill. This is years ago. It was like $35. Nobody caught it. Nobody said anything. Next month, she paid cell phone and power bill. Nobody said anything. And then she said, forget this. I'll just send it to my bank and pay all my bills. When we got there, when we were engaged and we started digging through it, she had done $800,000 of wire transfers to her personal account, all because someone gave her an admin right they should never have done. Okay, and so now I know you're asking, like, where was the reconciliation? Where was all this? She documented everything in SAP. They did not do a great job, but the way they found this was they were doing year-end prep for the audit. They looked in SAP, there was a supporting document missing. They looked at the transactions and they go, those are her initials backwards. And they figured out real quick what was going on. But all of the other transactions she had supported with some type of documentation, which allowed it to slip through the system. She ended up with 3 years in federal prison for that. So when we have frauds, like either one of these, what do we have? We have broken trust. Trust is something that is not an internal control, and I'll talk more about that later. But we have broken trust between the employee, the leadership, and the employees, whatever it may be. Normally, the pendulum swings the other way, and they get real suspicious of every transaction. So let's figure out how we can do this to keep maintaining our business and the way we're going. So let's talk about where are we today? What's going on in prosecution and in fraud? Now, if you look at this, this came from the ACFE Report to the Nation 2024. If you'll see, if we have transactions or frauds that are less than 6 months, we only have about $30,000 of exposure. So we're minimal, right? If they go for 5 years, we're at 875,000. These are median numbers. Okay, these are not average frauds. These are not the top or the bottom. These are median. So you got a lot more above and a lot more below, but you're looking at, obviously it's this, the graph shows you very clearly, the quicker we can catch a fraud, we can detect it, the quicker we can get it resolved and the less money that we're going to lose. And you'll see when they get caught, that's only like 31% of the cases that are reported. Okay. They go all the way up to 6. So think about, depending on your size of organization, how $1 million fraud would impact your organization. Some of you may be out of business. Some of you, it may be a rounding error, and I understand that. But we need to stop fraud in its tracks. The current landscape that I see, there's a reduced desire to prosecute. Why? It's a distraction. It takes time. It takes money. We've got to pull data. We've got to bring people in. The investigation is expensive. I'm not going to lie to you guys. When you start adding forensic accountants like myself and attorneys involved, things get expensive very, very quickly. It is a distraction to the business. Okay, everybody wants to know what's going on. What did they find? Who found this? What did they find? Who is it? What's going on? All of that distraction, water cooler talk takes away from the focus on the business that we need to. Long and involved prosecution process. Wherever you are, I don't know how your prosecution is as far as speed, but I can tell you in the United States, and I can tell you specifically in Houston, they are years behind in prosecution. Okay, I had a case I took May of 2020 that was public corruption to Houston District Attorney. To this day, they have not prosecuted it and have not moved on it. And they will not talk to us why. So I can't give you any details. I don't know why it's not moving, but we've kind of written it off. But you can almost always guarantee 2 years before prosecution. So then people go, is it worth it? Can I just fire Sally, get her out of the way, and we move on because I'm not going to get my money back and this is going to be a distraction. Limited sentencing, okay? Probably nobody dies with a white collar crime, okay? So sometimes the juries and the judges are very reluctant to give harsh penalties. Sometimes it's a minimal sentence and probation. Zero restitution. I have really not had a case that we've gotten money back. I've got one right now that I'm working. I think we will. They've already paid some of it back, trying to reduce the issue. But most of the time, people steal because they need the money. It's not that they're putting it in a savings account to pay you back if they get caught. Improved data analytics. Guys, this is one of the biggest areas that you can make a change in that maturity model. The data analytics have gotten so good, and you can do so much stuff with basic Excel skills. You don't need to have a PhD in data analytics to make all this work. There are plenty of opportunities for basic sort filtering in Excel that can get you a long way down the road. And then finally, at least in the United States, regulators are focusing on the data analytics. What are you doing to prevent fraud? What are you doing to be in compliance with regulations? So there's several things that are going on. This is why I think we need to take this inside the companies as a business process. Fraud prevention and detection is a business process. What does it take to be a business process? It needs a process owner. Somebody needs to own it. Doesn't mean just one person. It could maybe be 2 or 3, but they're focused on owning that process and focusing on detection and prevention both. It needs a risk assessment, no different than ERM or any other process you're going to do. Cybersecurity, like we were listening earlier, that risk assessment. Where do we have risks? You got cash, you've got risk. You take credit cards, you've got risk. You've got employees handling transactions, you've got risk. You've got employees negotiating, you've got risk. We'll talk about some of that population in a minute. You need a process when things go wrong. They will. You will miss a fraud. Something will go wrong. You will not use the right data analytics. You may have the wrong tool. How do you recover? No different than AP. If you make a duplicate payment, you've got a process on how to handle that. Same thing with this. Controls and procedures. Say, business process requires controls and procedures. How do we do this? How do we go about the prevention? How do we go about the detection? What do we do? What does it look like? Who's reviewing? What do we have to put together to make this a solid program? And then KPIs, how do we measure this? So you're like, well, if we didn't have a fraud that we know about, did we do okay? Maybe, maybe not. What's your KPI? What is senior management and the board focused on for you to bring fraud down? And then you have to achieve business objectives. Part of the business objectives, high level strategic goals, is to do something. How does the fraud prevention tie into that? Okay. It could be intellectual property theft. It could be pure cash. It could be all kinds of things that you're trying to stay focused on, depending on what business you're in. Okay. So let's talk about employee fraud. Yeah, those are handcuffs, and unfortunately, enough don't get those. According to the ACFE, Association for Certified Fraud Examiners, there are three types of fraud. There's financial statement fraud. Normally, from that comes from management. I'm not going to get into that very deep today. Asset misappropriation, inventory checks, payroll, billing schemes, etc. Bribery and corruption. That's everything from Foreign Corrupt Practices Act to UK Bribery Act to getting kickbacks for getting people in the door to propose on projects or getting the project accepted. Okay. A lot of opportunities in those. Now, we've got an advantage. ACFE has put together the fraud tree. Think of this as an inventory of all of the possible frauds you may have employee related. Okay, we're not going outside. We're just going to stay in employee related. So we've got corruption, asset misappropriation, and financial statement fraud, just like I showed a while ago. Below that are all of the options. Those are the areas that you need to consider as you're looking for prevention and detection. Okay, a couple of key stats from the ACFE report to the nation 2024. This is their most current report. 5% of revenue is the equivalent loss per organization per year. Okay, and so some of you are like, that's high. Maybe there's lots of fraud you don't know about. So go, okay, Dan, you're out of control with the 5% number. Go to 1%. What is 1% of your top line revenue? I would say at minimum, every organization is losing at least that amount. Now, do you know it? Can you quantify it? No, because there'll be frauds that we never ever know about. Okay, hopefully putting these steps in place will dig those out going forward, but you can say somewhere between 1 and 5% of top line revenue is what your organization is losing through fraud. Think if you could capture that and drive that to the bottom line. Some organizations that would double your net income. Some of you, it would be a positive income for the first time in a while. Okay, typical fraud lasts 12 months, and there's $6,000 to $21,000 per month stolen. Okay, I will tell you that once a fraudster starts, it is a straight line regression straight up. I have never seen anything very jagged. I've never seen it go up and just stop until they get fired. So you can assume if they start at 6, by the time you catch them, they're going to be at 21 or 50 a month or 100,000 a month. Average case loss is 1.7. That's case. That's not for an entire company. That's per case. 43% of the frauds are detected by tips. I don't believe I've ever interviewed people that were around the fraud, not the fraudsters, but the people around working, that they didn't see something. Now, they might not have been able to say, hey, Sally's stealing and I know she's doing this. It's like, Sally's got a new car. Sally's taking the kids on trips. Sally's got kids in private school. For what Sally and her husband make, they can't make that happen. Okay. That doesn't mean they're stealing. They could have inherited it, and that's the story you're going to get. They could have inherited it. They could have hit gold somewhere. Who knows? Okay. They could have won in the crypto lottery. I don't know. But it is worth checking. I have a good friend who says, do a parking lot audit. See what everybody's driving. Walk through the parking lot. Okay. If your accounts payable clerks are all driving BMWs and Mercedes, probably need to double check what's going through there. Okay. 52% of tips came from employees. Vendors know, customers know, all kinds of things. And those are things that we can get to on another time. Hopefully all of you have seen this fraud triangle. This is the Cressy fraud triangle. We've got 3 pieces. Every time there is a fraud, you're going to see pressure. So somebody's got financial pressure. And let's be honest, none of us have enough money. Okay, we can always use more. $10, $100, $50, 1,000, 100,000, a million, whatever. We could all use more money. So we kind of all fall into that. Rationalization. Well, guess what? You're the glue holding the company together. You're the one that works overtime. You're the one that comes in on Saturday. You're the one that figured out the big problem. And so they're not paying you. They're not bonusing you enough. Okay. or the people at the top are making too much. The third one is opportunity. Opportunity means there is a breach in control or detection. And this individual has seen that and said, you know what, I think I can do this and get away with it. And they start small, and that's why I said it's a linear regression up until we catch them. The one opportunity, that's a play on words, the one chance we have to stop a fraud is to close down the opportunity, okay? We can't fix their money problems and pressure. Only through performance reviews and honesty can we explain rationalization in some cases, but not even all the time then. But the one chance we do have to stop fraud through prevention and detection is opportunity. So that's where I would challenge you to focus. When there have been frauds, 60% of the issues related to internal controls. Yes, there's more things, tone at the top, bad management, incompetent personnel, low lines of authority, on and on and on. But the main one that caused the top two, lack of controls or override, that's 60%. So we don't have to focus on everything. We don't even have to make senior management good. We've just got to focus on controls to try to reduce some of this. Some of the red flags, and you run this into the education as you train all of your employees, living beyond one's own means, okay? If you find out Sally is got kids in boarding school and they're going overseas, whichever way you're going overseas, for summer trips, and they've got new cars and a vacation home out in the country, they're probably living beyond their means, depending on how their work status is. Financial difficulties. Somewhere somebody is going to say how tough life is when they're short of money. Okay, now we can always say, I wish I had more money. I'd like to go buy this. But I'm talking like real true, we're not making it. I don't know if we can pay the rent. I don't know if we can buy groceries. I don't know how we're going to put the kids in school. Okay. Unusually close association with the vendor or customer. This is why you see purchasing departments moving people around so that the relationship does not get too tight. Over time, relationships grow. We know that. Excessive control issues or unwillingness to share responsibilities or duties. If I'm doing the bank rec and I don't let you help me and I'm protective and I'm coming in and working weekends to get it done so nobody else looks at it, be concerned. Red flag. Recent divorce or family problems. So this one can go a million different ways, but usually there is a financial burden related to both of these. And then a genuine general wheeler dealer attitude involving scrupulous or shrewd behavior. Okay. I am the player. I am the rainmaker. I can cut the deals. I'm going to do whatever I need to help this company out. Okay. So they're going to be overboard bribery, corruption, think they can't be fired. You're going to see expense statement fraud, all kinds of things. So let's talk about a business process. How do we get there? Okay, I've talked about kind of the background behind it, but how do we get there? So we've got 5 things I want you to focus on to create this. Comprehensive fraud risk assessment. That is the first step. Where do you have gaps? Where do we have opportunities for people to steal? Looking at the ACFE fraud tree, okay, kind of gives us a list of where the frauds are. Develop key controls and improve governance, preventative, detective, and remediation controls. That could be a whole nother presentation at some point to talk about those. But how do we have preventative controls so it doesn't happen? How do we have detective controls on the back end of a process or a transaction so that we can catch it before it gets away from us? And then remediation. How do we remediate things that are broken? Data analytics and data analysis. I do not want you freaking out at this point. Excel, even if you're at 0 on the maturity model, Excel is a great tool. You want to move on up and you're up in the 5 category, you've got Tableau, you've got, I just lost the word, but you've got multiple great tools out there that can take us wherever we need to go and do as much as possible. You've got great controls within SAP and Oracle and NetSuite, some of the bigger tools. And, even QuickBooks is getting better about giving you data. Not exporting to Excel, I will tell you. I live that every day. And then a hotline. If you do not have a hotline or a whistleblower, time to get one. Okay. Because your employees know what is going on out in the trenches, I promise you. And then finally, the fifth point is you need training. You need to train your employees constantly, no different than you do on compliance or data security issues or cyber issues or how to work with customers or whatever it may be that you're training. Need to train them on fraud detection. Okay. Here's the list of things that can happen. Here's some red flags. Usually it's a breach of control. Any of that gets them going. I have done this multiple times and I'm always amazed at, like on the red flags, the people are not thinking that way. I live this, so I think it all the time, but most of the employees do not. They come in and they're doing accounting, they're doing purchasing, they're doing sales, they're working in R&D, they're manufacturing. They're not sitting there thinking about red flags. Back to the maturity model, think about where you may be in relation to those five right there. Okay. If you're at number one, let's figure out how to move you to number two. If you're at number four, let's go to five. If you're not doing anything, let's go to one. What's the minimum you can do to make an improvement to try to stop fraud in your organization? Fortunately, we've got some great textbooks. Okay. The first one is a new COSO manual that came out. It's the second edition of the Fraud Risk Management. This is the index right there. It is about less than a year old. I think I was on part of a steering committee that gave some recommendations. It is now in PDF so that we can make changes frequently. It had been like 10 years since the last one came out. Crypto has been big, data analytics has been big, cybersecurity has been big. None of those were in there. So this is now developed in a PDF format so that it can get out quicker and we can do more. But you've got a great textbook with that. Next, fraud risk assessment. Should perform it annually. Your business changes, the world changes. At some point, you may go from just taking checks and money to taking crypto. That's a whole nother world. You've got a new risk. How do you address that? How do you prevent it? How do you detect inside and outside both in that case? Broad range of department skills and team members. Get everybody that you can involved. Get sales, get purchasing, get R&D, get operations, get the inventory people, get the loading dock, get accounts payable, everybody that you can, because everyone's going to have a different perspective on what can happen. An exhaustive list of questions. Be able to go in, do surveys, whatever you need, thinking about that ACFE fraud tree and all of the possibilities out there. Use outside experts. CPA firms have forensic accountants and fraud examiners. Look for people that are CFE, Association of Certified Fraud Examiners, Certified Fraud Examiners. Look at them because they see this every day like I do. Discuss past entity frauds. If your business has had frauds, go, hey, I don't know if y'all know, but Gladys 4 years ago did this, this, and this. And Bob had his daughter on the payroll as a ghost employee, and we caught that. And let them know it actually does happen. Okay, it's okay. It's not the end of the world. They probably know anyway. And then assign responsibility to report on progress. How do we go through this? How do we capture all of this information and decide what are the 5 things that we can work on this year, the 3 things we can work on? You can't take all 100 of your findings, I promise you. So figure out which ones you can take and run with that on the risk assessment. So some of the risk assessment questions, very, very quickly, I'm getting short on time. Where have we had issues? That's history. What's changed in our organization? Remember that first slide? We've never moved this fast. We'll never move this slow again. What have we changed? How are we taking money? How are we invoicing? How are we making sales? How are we purchasing? What vendors have changed? Are we now global rather than local? Whatever it may be. What are we changing in the future? This is where you need senior management. They go, well, here's what we're thinking about doing. We're now looking to take cryptocurrency in 9 months. You need to know that. You need to be prepared. You don't want to find out on Monday you're taking crypto on Tuesday. Okay. What's changing around us? What is the other industry? Be part of industry groups as long as you can do that legally and talk. I'm put that caveat in there. But what are the other industry groups? I know in internal audit, They have industry groups and they get together and talk about what their findings are and what they're doing. It's not breach of trust, it's not antitrust anything, but it's just sharing of information. Do we have new systems or upgrades? If you're going to upgrade from project one to, sorry, let me turn that off, from ERP1 to ERP2, what is going to change in that? What capabilities are you adding? What capabilities are you losing? And then have we increased or decreased headcount? When you do both, you have got controls that fall through the crack. I promise you. So if Sally leaves because of reduction in force and Bob has to take over, Bob may not know everything she's doing because Sally probably did not document her job, as all of us could be guilty of being. Okay, so you probably are going to lose some controls that way. Back here, you've got the entire section of frauds that are possible. Some of these break down into some different ones, but this is your big one that you can do. The other list that is very good is from the American Institute of CPAs. I think they're now the Association of Independent Certified Professional Accountants or something like that. But this is a business fraud risk framework. As you'll see, it covers management, employees, suppliers, customers, and the board. So you've got a bigger list of possible frauds. So between these two, you've got a great list to work through. Next, controls and governance. Develop the controls, embrace the COSO framework. And then the DOJ, the United States Department of Justice, has just released a new, I say just, in September, evaluation of corporate compliance programs. So you may go, you know what? We're not part of that. We're not under their guidance. But this is a document that tells you how to be in compliance with laws and regulations and what they look for. So I would challenge you to incorporate that into your risk assessment, your controls, your governance, your data analytics, whatever it may be. It's an exceptional document. It's what they're looking for when they come in to investigate, for instance, Foreign Corrupt Practices Act. How well are you complying with the laws? So I would encourage you to do that even if you're not under U.S. jurisdiction. Data analytics. Start with the maturity model wherever you are. If you're running Excel, that's great. Every office is running Excel. And even if you're basic filtering and sorting, you can do things. One size does not fit all. So if I tell you, the word I was thinking a while ago was Alteryx. If you're running Alteryx, that's a whole nother level. You're moving up into 4 and 5. If you're a small business, Alteryx is too expensive and way beyond your pay grade for that. You don't need that. Excel works great. Okay. You can sort, you can do conditional formatting, you can do pivot tables and find things. I ditched my data analytics software in favor of just using Excel now. And with Copilot and some Python and a little bit of artificial intelligence built in, Excel is an amazing tool for us now. So I would encourage you to use that and embrace AI. AI has changed our world. When I bring up Chrome, it comes up with a couple of browsers that I want. I mean, a couple of tabs and perplexity.ai. I talk to Perplexity all day long. How do I, whatever, what about this? What are the laws around this? What are some possibilities for this? And I have not seen much hallucination, especially in the technical world of like Excel and data analytics. So I would highly encourage you to use that. Some of the things that you can do some testing on very simply is accounts payable, vendor matches to key phrases. Look for cash, jewelry, jewelers, whatever it may be, things that you're not normally buying in the course of your business. Employee versus payee name. Is there somewhere close? Like, do you have Dan Ramey as an employee, and then do you have Ramey Services? Okay, now I'm going to be honest. Some of your fraudsters are not that smart. They're not going to think through some of this, and it's going to be very, very simple. They love initials. Okay, so they use their initials and add ink to it, and that's as far as it gets. Vendor versus payee address. If you're paying by ACH, run their payroll ACH to the vendor ACH, see if you've got matches. Because this stuff is not that complicated, and most unsophisticated fraudsters are not going to go through this and do a lot of work, I promise you. Employee versus payee address, check that. You can, even if you get down, you can do by zip code, and they may have a post office box, or we call them UPS boxes here in Houston or in Texas or in US, that you can get one and you don't have to go through the post office and all of the rigmarole, and it's by a month case. Duplicate vendor addresses, rising invoice amounts by month. One of the things you can do is take all of your transactions and then start looking to see if you've got a vendor that is increasing amounts month over month over month over month, or period over period, quarter to quarter, whatever it may be. Okay. It may be completely legitimate, but it may not be. And the fraud, that could be the fraudster. Okay. Processing voided payments by month or year. A lot of fraudsters will do voided checks. Payment dates prior to invoice dates, they will get sloppy. Okay. If they're in accounts payable and they come in and they want to go in and to drop a payment as quick as they can, they're going to maybe have a wrong invoice date, and you're going to see it paid on June 1st, but the invoice is dated June the 5th. I have seen all of this stuff. They get sloppy at some point. Duplicate I'm going to push on through this. Small dollar amounts, multiple payments, same day, same vendor. Average days to pay. If your normal average day to pay is 40, and you're seeing something that a vendor that has a average pay date of 4 or 5 days, red flag. Okay. This is what I'm telling you. None of these are very sophisticated tests that you can do. Now, AI is helping us tremendously. I embrace it. I embrace it for my students. I embrace it every day that I'm here working on cases. Left of bang. The last one is a hotline. Next to last one is a hotline. I highly encourage you to get a hotline up and running, advertise it, put it on your website, put it on your check stubs, put it on your payroll advices, put it on your purchase orders, put it out there. Now, the last one is the key. Action is required. If you have the hotline and you're getting calls and you're not investigating, you'll quit getting calls. Because if I think you're not listening to me, then I'm going to quit calling, because I think management doesn't care. So if you get a call and it says, hey, I think Bob has got this going on. I'm concerned about Bob. This is happening in his life. This doesn't match with his job. You need to check it out. Okay. You don't announce it to the world. Y'all know how to handle all of that, but action is required. This is the one I recommend. This is one of my favorites. It's called Ethics Suite. People are very hesitant now to pick up a phone and call in a hotline, but they'll do it over the web. Okay. So internet-based hotlines are the best that I think. This one is a great one from a cost perspective and from what they have built into it. Last is training. Train. Teach your people what's going on. Show them the red flags. Teach them some of the data analytics tools. If you need lunch and learns, the Center for Audit Quality, which is based here in the United States, has a anti-fraud collaboration. I had to work on ACF. Anti-fraud collaboration group. They have got about 5 cases that you can get from them. You can download. And then if you want the answers and the discussion memo, then you have to ask and you have to prove who you are and that it's not going to students and things like that. I use them in my classes. They are great for lunch and learns because they're not black and white. They make people think, and it's very much like our real world and work in the office. And then finally, Fraud Awareness Week is always in November, sponsored by ACFE, and they give you tons of good information, posters, ideas, videos that you can share with your employees to try to educate them. So, action steps real quick. Fraud risk assessment, evaluate your internal controls, evaluation of corporate or accounting policies, procedures, create, improve your data analytics. Start with Excel. That's great. If you're beyond that, knock yourself out because the sky's the limit. Hotline training and then rinse and repeat because you're never at 100%. Even if you're at 5, we're going to get new tools, more information, quicker information for you to get into. So a couple of things, I'm going to leave you with some resources. This is a document that I publish about twice a year, and it has everything from books to podcasts to websites, conferences that if I haven't been, I don't put them on there, that I recommend if you would like to get on I don't use it for marketing. It literally goes out to, it's grown so much, I've got about 3 different groups I have to push it out to. But if you will get your email to Tracy and to IFOL and ask them for it, I'll add you to the list. It literally is, here's the next version. And then there's some data analytics tools you can use. Remember, trust is not an internal control. I appreciate everyone trusting their employees, but we can't. I don't want you trusting me. Put internal controls around you if you don't have them. And then here are some resources that you can link to. The IFOL has the presentation in PDF. You can go reach out to them for this. COSO Fraud Risk Management Guide I talked about earlier, managing the risk of fraud. Fraud Checkup, Fraud Awareness is in November every year. And then finally, if you really need something to knock you out at night and put you to sleep, the ACFE Report to the Nation is all charts, statistics, and graphs. So great information. We all use it, but there's no context to it. You're on your own. And then Center for Audit Quality and Anti-Fraud Collaboration case studies. And there's a couple more behind that. So I don't know where we are on time. I think I pushed it. So
Dan,
do we have any questions?
I'm afraid we don't have a lot of time, Dan, but I know that if people reach out, we'll do our very best to get the answers
Okay.
to everybody. That was a great session. I thought it was worth hearing it all rather than pushing you to do the question bit. So thank you very much indeed.
Okay. Thank you all. I appreciate you. Thank you for joining us.
Yeah, Dan Ramey at Houston Financial Forensics there. Thank you so much.